Hello everyone, welcome back to the Mikhail YouTube channel. In this session, I'll be trading again using a strategy I personally created, which I call the traffic light strategy. The traffic light strategy uses only a few essential indicators so the chart stays clean and easy to read. These include moving average 7 in green, moving average 20 in yellow, moving average 60 in red, and the MACD with default settings. The concept comes from real traffic lights. The green line shows the start of momentum, the yellow line confirms direction, and the red line marks a strong area where price often reacts. At its core, this is a trend-following approach. A buy signal appears when the green moving average crosses above the yellow moving average, and the MACD confirms to the upside. The trade is then placed at the opening of the next candle. Sell signal forms when the green moving average crosses below the yellow moving average, supported by a bearish MACD crossover. The red moving average, or MA60, plays a key role as a dynamic support and resistance zone. When price reaches this level, we often see reactions that create high-probability trading opportunities with controlled risk. Now let's move into a live example to see how the strategy works in real market conditions. I'm entering a sell position because we now have strong double confirmation from both the moving averages and the MACD. The green moving average has crossed downward and is clearly pointing lower, showing that bullish momentum is weakening. At the same time, the MACD has also completed a bearish crossover, with momentum shifting to the downside. This alignment indicates that sellers are starting to dominate the market and that the overall trend is turning bearish. Based on the rules of the strategy, this is a valid and high probability setup. Let's observe how the price develops. All right, the trade has closed in profit. With this setup completed, we can now look for the next opportunity and open the market again. I'm taking a buy position because the red line is acting as a strong support level in this market. Even though there is a crossover forming, the price is still holding above the red moving average, which indicates that selling pressure is likely to fail at this area. This support suggests that the market has a higher probability of bouncing upward rather than continuing downward, which is why this buy setup aligns with the strategy rules. Let's see how the price reacts. All right, the trade closed in profit. With this setup completed, we can now look for the next opportunity and open the market again. I'm entering a buy position based on a bullish MACD crossover. The MACD fast line has crossed above the signal line, and the histogram is starting to expand upward, indicating increasing bullish momentum and strengthening buying pressure. This crossover suggests that the bearish phase is losing strength, and that the market is transitioning into a potential bullish move. Let's monitor the price action. All right, the trade has closed in profit. We'll now look for the next valid setup and open the market again. I'm taking a sell position, following a confirmed bearish MACD crossover. The MACD fast line has crossed below the signal line, accompanied by a red histogram that is expanding, which signals increasing downside momentum and strengthening selling pressure. This crossover indicates that bullish momentum has weakened and the market is entering a bearish phase. With momentum shifting to the downside and sellers beginning to dominate, this setup meets the technical conditions required for a valid sell entry. Let's monitor the price action closely. The trade has closed in profit. With this setup completed, we'll now open the market again and wait for the next valid technical confirmation. I'm entering a buy position after receiving strong dual confirmation from both the MACD and the moving averages. The green moving average will cross above the yellow moving average, indicating a shift in short-term momentum, while the MACD has also completed a bullish crossover, with the histogram beginning to expand upward. This alignment confirms that buying pressure is increasing and the market is transitioning into a bullish phase. Based on the rules of the traffic light strategy, this setup qualifies as a high probability entry because momentum, trend direction, and confirmation are all aligned. Rather than anticipating the move, the entry is taken only after clear confirmation. Let's monitor how the price develops. All right, the trade has closed in profit. That concludes today's trading session. This example clearly demonstrates how the traffic light strategy performs when executed with discipline, patience, and strict adherence to the rules. For those who want to study this strategy in more depth, including real-time explanations and structured guidance, you can learn it inside the VIP group. Thank you for watching.